Hey traders, it's Leaf West again, making a new video. I'm going to try and go over three things today. Two on the SPDR ETF and one on FCX. The two on the SPDR are the sort of key reversal plays. One, and the one in the afternoon I played, but I played it incorrectly. And the one in the morning I was involved in some other things, so I did not play now, but I wanted to show people how to do that. So here's a 3-minute SPDR chart in front of you. I'm going to zoom in to the 1-minute chart so I can show you better the action. So here's the 1-minute SPDR chart. Try to take most of my fib lines off it so it doesn't interfere with your view of it. The market gapped open this morning and then corrected downward, and the key thing for traders, if you believe in the bullish scenario, and I sort of did in the short term here for a bounce, you want to look for a key reversal once you start correcting. Again, I was elsewhere, so I was not involved in the SPDRs or generally even looking at the general market. I was looking at a couple other things. But the first thing you do is draw a retracement grid to a possible key reversal point, that being the possible low of the morning. So here I have that reversal grid drawn. This is a 1-minute chart, so I did not go to the previous swing high on the move into the potential low of the morning. I go back usually to make the chart a little more larger in terms of range. I go back to the second pivot high. Again, that's a sort of subjective viewpoint, but what I'm trying to do is get a reasonable range the market has to deal with before it tells me whether it wants to reverse or to continue on downward. So looking back at what happened this morning, this is how I would have, if I'd been hawking this SPDR first thing, this is how I would have drawn. And again, you would not have this drawn until sort of 3 or 4 bars after the potential low. Again, the lines shown in this grid are the typical 78.6, 61.8, and 38.2 lines, and then the top and the bottom of the reversal pattern. And again, what you want to have happen if you're playing for a reversal is for price to get above the 38.2, stay above there, ideally stay above the 61.8, and show you strength in that range between 78.6 and the breakout level. And you can see what happened. Basically, after making the low, we moved higher, corrected back down, bounced off the 38.2, and then marched right outside the pattern. Again, I like to buy, once I have a feeling that it's going to break out, I like to buy as it's approaching the breakout level to give myself a bit of a cushion in case it goes up and then retests, so I don't get nervous about holding a trade that may crack down to the 61.8 level. Again, in this case, it marched through and just marched upward past our first target. And I normally, especially in markets like these, I would have taken half off at this first target, the 1.618 level, and then raised my stop to probably the break even, or sorry, either the break even point where you get in or the pattern breakout level. And then as the market moved higher, you can see that it put in sort of a triple top, and that was your sign to either tighten your stop to probably just below this target, the first target, or to try and sell at these big range bars on the 1-minute chart. Okay, now let me show you the second one. Now we're back to the 3-minute SPDR chart, and I actually did a blog post on this with the premise that this potentially could be a key reversal point as well in the day. And you go back to the previous sort of pivot high, which in this case really was pretty high in the price range. It was near the high of the day, but that's what I was looking at, and I was thinking that for the market to really tell me it wanted to go higher, it was going to have to go through that scenario again of getting above the 61.8, getting above the 78.6, and showing me that it wants to break higher before I really believed that we were going to break the highs and go into to higher and higher prices. And lo and behold, after I posted that, there was another pattern inside this pattern which showed contraction. You can see the green bars on the bottom here show me a contraction pattern, and I'll just light that up for you. Hang on one sec. After that suspected low, we did move up a little bit, and then went down and retested the low and made a double bottom. And I like to play those patterns where we have a lower swing high and either a double bottom or a higher swing low. And so I was looking at this. I didn't post about it, but I was looking at this, and what I did was, because I gave the fact that the market was trending down the benefit of the doubt. And even though I sort of posted or tweeted about 3 times during the day how strong the up volume versus down volume was, saying that the market wasn't showing that it wanted to go lower, that it was showing strength, underlying strength, and I actually said that that what we were probably seeing was a correction and not a trend. But ignoring myself, what I did was, maybe I'll go to 1 minute chart. Hang on one sec. So this is the 1 minute chart. Okay, so we made that double bottom and a contraction pattern. So I drew the grid, and again, you watch what price does. And to me, it looked like it had done a double top on this 38 points, or sorry, that's a 78.6 level. And I guess looking back, I ignored the fact that we'd made higher lows on these 2 pullbacks. I clued in afterwards, and I covered myself for only about a 3-cent loss. But anyways, what I like to do then, when I've got a good feeling that it's going to go in a certain direction, I'll try sometimes to buy, or in this case short, at the other extreme. And so instead of shorting when the price moves down and it looks like it wants to break out of the pattern, I'll try and get a really good price and start short by shorting in this around the 78.6, or ideally between the 78.6 and the breakout level of this pattern. And it did show a lot of strength, shooting straight through that and up above the pattern. But I wasn't worried about that, because I knew it was going to come back and retest. At bare minimum, it was going to come back and retest the pattern, and I wanted to see what it did then. And then when it came back into the pattern and refused to really break below the 78.6 level, that's when I decided to cover. And I think I covered it. I shorted at 33 cents, right on that 78.6 level, and I bought back at 36 cents, I believe. Originally, I set my stop at 63 cents, which was just above this VWAP line. Again, those a lot of times are used by algorithm trading programs to either short at or buy on a breakthrough. And more or less, it worked in this case, that it didn't go above there and came back into the pattern. So I misplayed that, but I should have known better because of the up-down volume. I should have actually been playing the long here on this double bottom below the 61.8. That would have been the right spot to buy there on the break through the 61.8 to give yourselves a cushion for any pullback, and then you have lots of cushion to let the trade unfold the way it was going to unfold. Now let me jump over to the screw up I did today on Freeport. Now quickly, because I'm running out of time, Freeport and a lot of other material stocks were stronger than the market yesterday, so I was actually positively biased towards material stocks today, and Freeport's one I jumped on too quickly on a potential open range reversal trade. And I'll zoom in. Here's the point on the 3-minute chart where I got involved. The market basically corrected down, the FCX corrected down with the market early in the morning, and then moved back towards the opening range. And typically when you get a sell-off because of just market weakness and actually the stock has been strong, it will trade back into the opening range and often go to the top and break through. So that's what I try to play in this case. Here we go to the 1-minute chart and show you. So here's that point in time. I actually just saw the chart as it was doing this sort of move into the bottom of the opening range, and I probably didn't give it enough thought. With the Fed announcement today, it was it's a silly day to trade a lot, and I'm sort of kicking myself for this trade. But anyways, as I've described in the past, what happens is the first attempt to break back into the opening range fails, and it pulls back usually to the moving averages, and then tries again. and I jumped the gun, and I think I bought it at 74 cents just before it was going to poke back into the opening range. I thought I was going to be smart and get it at a good price and get a good winner on that one, and I didn't give it enough time. Obviously, to do that, and I actually drawn retracement grids because I knew it could potentially pull back even another time, and I wanted to buy a second part, which is what I did. But here, I'll show you that. So here's that grid, and I was happy to buy down into sort of that 39, 40, 41 was the 61.8 retracement. And I bought I think at 50 cents, and my stop was at 35 for the whole piece. And actually, it was flirting with my stop going into the Fed announcement, so I took off my stop because I didn't want to get stopped on just some flickering of volatility right around the Fed announcement. And so, in the end, I changed my stop after the Fed released its announcement and put it at 25 cents and got stopped out later in the afternoon. But again, it was a good idea, in fact, but if I'd given enough time, I probably should have even tried shorting it, not going long the trade, and I should have done that after I waited to see if it was going to break in there. There's lots of time to make the money on these trades. You just have to be patient and disciplined, and I was neither of those today in this trade. All right, have a good day, guys.